Okay. All right. I think that should do us. So if I start with the intros and then any strugglers can obviously come in, they won't really have missed too much. So thank you everybody for joining us today. This is the last in a series of 3 presentations, which we have put together with ACORD and multiple market participants who I'd like to thank for all their time and effort in making this happen. So I will start with this particular one, and then I'll speak to the previous 2 just in case you want to look them up, because they are available as recordings on our YouTube channel. This session in particular will be speaking to implementation of the full ACORD suite of messages and the synergies that can be achieved from doing that. And we have guest presenters, Clarissa Montecillo of ACORD, Simon Squires of AXA XL, Jason Bissessur from Marsh, Troy Hughes from Aon, and Ralph Koglin from Swiss Re. I do have a couple of housekeeping points that I need to go through. The first is that this session is being recorded, as were the other 2, so that they can be made available to our members and various other interested parties on our YouTube channel. The second is to note that we'll be taking questions at the end of the session. However, you're more than welcome to use the Q&A function in order to log them as they come into your mind. So we will take them from there and deal with them at the end. And the last is that the slides will be circulated following the conclusion of this session. We will also direct you to where you can find the recording and the recording of the 2 previous sessions. And there are CPD points available for this, and there will be an email that goes out providing all the links, the information, and how to obtain those CPD points. And then this is a presentation or a demonstration of the previous 2 sessions, the first being more introductory and walking through use of ACORD messaging and implementation via Rusticon and how that ties up with the work that we've been doing in the London Market Data Council. And then the second was talking about modular implementation of the messaging suite and how you can pick off your biggest problems first, which I suppose is almost the opposite of this, where we're talking about a full suite implementation and the synergies that can be attained through that. So with no further ado, I will hand you over to Clarissa Montecillo, who can kick us off.
Unmute myself. Thank you, Kim. As Kim said, we are going to be talking about the full digital life cycle and how ACORD and the data standards can help help the benefits realization journey of a digital marketplace. Can we go to the next slide, please, Kim? I'm going to start a little bit with a review of the previous 2 sessions. I realize that not everybody who's attending here has attended all of them, so just a brief overview of what we covered in the first 2 sessions. So session 1 focused on data standards and particularly the role of ACORD in those establishing data standards. So if I could get you to click once. So what is a data standard? Just click a whole bunch, actually. And again, so a data standard versus a data dictionary. So a data standard is more than just defining the data points itself. It talks to the structure and the relationship between those data points, as well as the exchange of that data across different business partners in the insurance life cycle. Can I get you to click again? And just 3, I think. So, and what is ACORD in that? So ACORD is a data standard setting body. We're non-profit, so we're not here to sell kind of the ACORD standards in outright. We are about raising the community so that we can all move forward on a digital journey together. So we support different implementation communities globally. One of those communities, one that we've been hugely successful with, is the Rusticon community, which has done a lot of work in implementing of the EBOT and ECOT standards. So can I get you to click a couple of times as we move into Rusticon? Okay, maybe too many. So GRLC, the ACORD standards actually has a lot of standards underneath it. GRLC is the standard that deals specifically with global reinsurance and large commercial. It's focused on commercials and specialty lines. And we've worked with the Rushdie community, which is largely made up of the top 10 brokers, reinsurance brokers, and the large reinsurance carriers globally, to look primarily or initially at accounting and claims standards and how that community could interact in an interoperable way using the GRLC standards. More recently, we've moved into the placing function, and Simon, who will cover a lot of the work that he's done with the placing message, and how that works with the accounting and claims standards. Next slide. So session 2 looked at each of those separate functions. Just do a whole bunch of clicks, Kim. So session 2 looked at the different standards within messaging standards within GRLC. We looked first and foremost at the accounting standards, which were implemented initially by the Rushdie community around about 15 years ago. And it looked at the exchange of accounting and financial information between two parties, brokers and reinsurers. And it's by far our most widely adopted of the GRLC standards. Next came claims. So claims sat alongside the accounting standards, and it looked at claim financial information between brokers and carriers. And more recently, as I mentioned earlier, we moved into placing, which is looking at the contract placement process throughout the placing life cycle. So at each of the major interaction points during placing. Next slide. So we also covered in those first 2 sessions some benefits realization of the accounting and claim standards, as well as placing. Just hit 4. So I'm just kind of going to highlight a couple there. These are all available as use cases on the ACORD and Rushdie websites, and it looks at the benefits realization of implementing the standards across different implementations over the last 15 years. The 4 I've got there are more recent. They're the last 3 years, I think. So we're looking at tangible benefits which are provable and can be replicated by other parties who want to adopt the standards. Next slide. And today we're going to look at joining all those together. So each of the standards individually brings benefits, but if you bring them all together, because they're designed to interact together, you actually get more than the sum of the individual parts. And the 2 use cases you're going to be seeing today talks to that very point. I'm going to stop there and just not steal Simon and Troy's thunder. So I'm going to hand over to Simon, I believe, next. Thank you.
I think it's Jason first, isn't it?
Yes, it is.
Cool. We're a double act, yeah?
Yeah, these days we are, Simon. Yes, so basically just sort of putting in what Clarissa said into a bit of colour, and sort of how we're adopting standards and the benefits and our process and the benefits we're seeing down there. We'll just talk about a bit about the cost problem in the large commercial specialty insurance market, specifically in London. So Lloyd's of London published a 35% expense ratio in 2024. 12% of which was administrative costs, and that's been 50% higher in the past 12 than it has been in the past 12 years. So it's previously 8%. So what that's pointing to is that we've gotten less efficient as a market than we were 12 years ago. And the large reason for that is that we're driving an essentially document-centric process. Talking to what's on the slide. So if we look at what we do today, we, on the broking side, we collate risk profile and exposure type document information in PowerPoint, Word documents and Excels. We love a good Excel in the London market. And we convert that into data. And that rekey actually happens around 35 times from system to system across the insurance lifecycle. And especially just on our side alone, that 35 times is what we do on the broking side. And then what we do is we send that to carriers who rekey it into their systems, and they rekey it X amount of time. So it's hugely inefficient, and you'd expect more in a data-driven world. What we want is to pull the documents up front, digitize them there, and then pipeline that data down to our carriers. It's faster, it's error-free, and it's efficient. So if we go on to the next slide, please. This shows what the Titanic slip of 1912 would look like in 2025 if it was digitized. You could see everything was sort of in an unstructured document text, handwritten in some cases. And we're moving towards more of a journey where we want to capture that data and just exchange the data ultimately. So moving away from that document-centric process and into more of a data-first world. Next slide, please. So Whitespace is a platform that we're using similar to PPL that is allowing us to do that. It has this concept of data tags, which allow us to identify data points in the contract, kind of like you saw in that Titanic slip just now of the future. And what we've done is we've digitized, by digitized, I mean data tagged our slips across our business, and put that onto the platform. So we've done that for about 92% of our business, which is about 13.6 billion worth of premium flowing through on those digital slips. And Whitespace has an API, which allows us to draw down that data as it flows through that trading journey between us and our markets. So broadly, what that process actually looks like is we've got renewals teams offshore that build our digital MRCs 3 months in advance. They then pass that onto our UK-based broking teams, who then check the slip and send it out for a quote on Whitespace. And then the risk is bound on Whitespace with our markets. That data is then automatically passed through our invoicing system, and an EBOT message, which uses ACORD accounting, the ACORD accounting standard Clarissa mentioned earlier, is then sent to, in this case, AXA, via the ASG gateway, which is called Adept. Next slide, please. And basically, a lot of the benefits that we've seen of that is, especially on our carrier side, on the carrier side of the equation, a lot of carriers these days are building workbenches as a single pane of glass solution, which is sort of supporting with data-driven triage, pricing, trading, and processing as well. And API sort of enabled market platforms are really sort of starting to support that and the data standards. So I'm going to pass on to Simon now, who's going to talk a bit more about what happens when we send that EBOT message across to AXA and then what they see on their side.
Thanks, Jason. That's great. Good afternoon, everybody. Go on to the next slide, please. We've been working with Jason and the Marsh team for 18 months or so now. And we did a piece of work called Market Connectivity, where we foresaw the development of a digital marketplace within London. And I'm just going to talk a little bit about how I think that's come about and what are the key things that have really facilitated that. As Jason said, Marsh in the middle of 2024 stated an intent that they wanted to be the world's first digital broker. And what that meant was they connected their operating platform directly onto the Whitespace data tables so that data would flow very quickly and easily through that process. So Jason and I have been working together the last 18 months to roll out the deployment of that, and for both parties to gain benefits in terms of how we can interact and trade with each other. So the first thing that really happened, back to Clarissa's point, in 2024, we saw the kind of final vision of the Rushlicon placing and the Rushlicon accounting groups, in that for the first time, the GRLC standard could go all the way from the beginning to the end of a commercial insurance transaction. So if you look at the blue boxes across the top, this is a summarization of how the digital transactions moves. And all of the London market platforms and the way people are working and the commitment that London has given to using the standards mean that this, for the first time, this has become a standardised process. So we start at the left with the indication and submission documents. Generally, there's some sort of schedule of values or exposure value summary attached. The insurers will then work up their pricing modules and their exposure cap management processes, and then we'll go back to the broker with a quotation. The broker will tell us via the firm order whether we've won that business or not, and then because we're a subscription market, you'll get assigned line advice to see whether you've been signed up or down or your line stood as originally planned. Then once that's all happened, you'll receive a couple of things at the end as they go through the processes. One is a digital MRC contract that comes through as the placement confirmation. And also the nice thing is that every time an endorsement is done on that contract, you can actually then receive digital endorsements as well. Then once the placing step has ended, we move seamlessly into the accounting process. So a technical account can then be generated, which replaces a paper invoice. And then a financial account will tell you that the money's moved and effectively replaces a broker statement as we knew it in the past. Then as well, if there are claims transactions, you can get a claim movement message or a first notification of loss or a reserve adjustment. So they tell you the reserves and the movements, but when the money's ready to move, that goes through the TA and the FA process as well. But for the first time ever, we have this one digitally interconnected life cycle that we've never had before, and it's all tied together with digital references and digital interactions as we go through that process. So this is really a bit of a game changer. What we then did was we looked at how could we work with the Marsh teams and the interactions on the market-based collaboration platform data tables, and how could we bring that into our organization. So we created some API connectivity through that, and then we used the ACORD Adept Gateway to summarize those blue boxes and transactions. You can use other market gateways as well that are available, so you just need one that's ACORD enabled to be able to do that. And then what we've looked at doing is bringing those events into our user interface or workbench connectors. But on the left-hand side now, we're doing the placing events, and then as we move to the right-hand side, we're doing the accounting events that really drive us through all of that process. So in the old model, we used to have underwriting not connected with operations and claims. We had manual paper processes. We quite often in accounting would only get a right first time match in 50% of cases between placing and accounting, and all that's being transformed by that, and it was quite slow and expensive. We just click one more. So this whole process now of creating this digital marketplace moves us to the next stage. Can we just press the next button, please? There should be another box. There we go. So this is our new world that we've transitioned to, where we've got one interconnected data record. We've got real-time transmission of data. We've got a highly effective cost model, and we've got rid of a lot of the rework and friction that used to take place. So because we've built this model, the minute the Marsh teams are putting on a MRC, an endorsement or quotation information, we get that data in real time because the gateway listens to the activity either on the market platforms or broker connectivity, and it brings it in real time with nobody, in the old model, maybe a broker sending a document to an underwriter and an underwriter sending it to operations. None of that has to happen now because it flows in real time through the digital data pipe and gives us truly digital interactivity. If we go on to the next one, please. And one more. So as you look at the benefits that you get from this, first of all, we thought it was going to be more about the operational savings that we could make. because now when you get the final version of the digital placement or endorsement record, that will almost always directly agree to the technical account. So this eliminates almost all of your accounting queries, because the previous accounting queries were generally due to missing endorsement documents or wrong versions of the slips or misunderstanding in how things got processed, whereby this model firms all of that up, and that can't really happen. Then if we press one more, the other benefit we get now is that we get direct information on our MRC placement data that's coming through, and also we get all of our endorsements in real time. So before, you could have had ones missing where the emails weren't sent, whereas in this new model, it drives to that next stage. We can just press, hang on, there you go. So this bit in the middle then starts to give us more stuff about broker and underwriter efficiency. And then when we worked with Marsh, initially we implemented the EBOT accounting process. Then we went through and we trained all the underwriters to work on white space and to give us the digital MRCs and the digital endorsements. But then Jason said to me as well, would some of your teams be prepared to start digitally quoting on the platform? So now we've had over 1,000 plus digital quotes, whereby the underwriters and the brokers are negotiating and communicating directly on the trading platforms rather than sending emails and documents backwards and forwards as well. So that's created another whole efficiency that we follow through. And then if we go on to the next one, where we're moving now as we go into 2026, there should be one more box that comes up. Thank you. This then is moving us back to the digital submission stage. So now we're looking at getting indications and submissions in a digital format. And as we talk about the development of the digital follow marketplace in the UK, this is really helping to fuel that whole process, because you can't really participate in the speeds that you need for digital follow unless you've got structured data and unless you can manage all of that as you go through. So this has really been the big drivers. It means speed is much quicker. It means you've got a real-time exchange of data. It means you won't ever have the wrong version of the slip or a previous version, because the platforms have always got the latest one. It means that you won't ever have any missing endorsements. And it gives you a fully auditable data flow where you can see every interaction on the policy and how that works. If you go on to the next one, we're just having, thanks, just one more, I think, yeah. So since we've been live, we've had about 400 EBOT messages that have matched to placing. We've had about 3,000 endorsement messages, 2,000 firm orders, and I said over 1,000 digital quotes. So we see this now starting to build the future of the digital processing market, and we can see that it's started to use for other things, whereby originally we thought it was an operational driver, but now it's broker underwriter efficiency and the ability to write digital follow and higher volumes. We've also seen people using it because it's structured data to apply algorithmic underwriting rule sets against, whereby we can see facilities that are algorithmically underwriting. Those rules can be applied in this structured environment. We could see a future use case where you could eliminate bordereaux on things like MGA risks, and you could digitally transfer that data as well in real time. And we're also seeing how we could manage contracts more effectively and how we do that. So just the last one, I think the thing to say is that because of the work that London did in building the market platforms, we go on to the next one, please. I almost call it kind of gold at our fingertips now, because we have the infrastructure with the platforms to be able to structure this data effectively and move it forward. We're seeing that it can take away administrative work from underwriters and brokers and send it straight in a digital format. We can see it starting to remove paper and email and moving towards structured data. We can get real-time event notifications. In a more sophisticated model that we're now working on with Marsh, is that the data schemas could be fully completed, and then you can put that straight into your operating systems. And we see the start of the emergence of negotiating a digital MRC rather than a paper one, which means you can work on terms and conditions and how you do all of that. And as the market starts to unfold, we've probably got three key areas where we see the deployment of that. The digital lead area, where we think there's going to be quite a lot of use of AI and moving all that forward. The digital follow area, where this is really helping to provide structured and process to that, and also more digital portfolios. So I think the message is we can use this to really build a solid foundation of digital correct data. And then on top of that, you can kind of supercharge your AI layers that you need to do your more complex tasks once you've got your data into a really good real-time state with high data quality. And I think with that, I'm finished, and I think I'm handing over to Ralph.
Well, Troy, but that's all right.
It's Troy, sorry, Troy.
We're missing the head. Thanks, Simon. And thanks, Jason, as well. As will probably not surprise anyone, as I talk through, you're going to see a lot of the same flows. Again, not surprising, right? We're all part of a digital standard. That's kind of what we're all doing and representing here. So, as many of you know, the Rushdie Initiative is a group formed to leverage the ACORD standard to gain efficiencies within insurance and reinsurance. So, as was kind of mentioned, these efficiency gains come from such things as faster cash movement on accounting and claim side, faster processing in general, from the creation of the contract all the way through to settlement. We're really working hard to have a digital trading cradle to grave solution. And we also get efficiency from both more robust as well as cleaner data throughout the process. So in order to get these efficiencies, we need to have an agreed upon process. This is an agreement as an industry to make the process straightforward. It's an agreement among all the participants that making the industry more efficient benefits all, and strategic competitive advantage does not come from the base process of transacting insurance. So you'll see from the list of companies on the slide that those are competitors within the industry, but they still support this initiative with their time and other resource, because this collaboration is something we can and should all get behind. While much of the early work was done on the reinsurance side, at least from our side of the fence, we're now continuing to realize those same benefits on the insurance side. Next slide, please. So here we have a listing of the accomplishments we've had in the ePlace and Rushdie group. I'm not going to read them all to you, as clearly the biggest achievement right now are the fact that we have implementations in 2025. 6 years certainly represents a journey. I'll be honest and say I was not expecting it to take quite this long, but it's important to get these things right. As they say, you only get one chance to make a first impression. We wanted something that was fit to purpose at the outset. That's not to say that our work's done, far from it. While we have a solid data dictionary in place that accommodates the work that Rushdie has already done, we're now finishing up a best practice guide that also handles the workflow around those data points. There's still more to do, including more lines of single risk business beyond property. We have to tackle endorsements at some point, et cetera, et cetera. We also in constant communication with the placing platform providers that you would have seen on Simon's slides, as well as the Future at Lloyd's initiative, to make sure the standard is robust enough to support all. Spoiler alert, we believe it is, but constantly collaborating guarantees this stays true. Next slide, please. So here we have the workflow that we considered to be phase one of our implementations, along with some early next steps for expansion. So the initial sharing of the structured contract information with updates to this contract object as the process moves toward bind. Document exchange is a huge efficiency gain, as moving documents, including the large exposure cap modeling data, can be very time consuming in the traditional method. Underwriters love having these documents downloaded and filed in their own document management systems automatically. Huge plus there. We then move on to the quotation phase. We as a broker send a quotation request to the market, and receive quotations or declinations back. The differentiation between the decline to quote, let me know when firm order terms are ready, or decline to participate, i.e. we don't write this business, no need to contact us again, is also supported. We left alternate quotes out of phase 1, but it is our first item in phase 2, and we expect to be supporting that by the end of Q1 2026. On to the firm order terms. We send a request for line and receive an order offer or declination back from the markets. As with alternate quotes, we left conditional lines out of phase 1. We can handle very simple subjectivities, but any hardcore negotiations are done via traditional methods. Note there's no phase included on including that in. We need to evaluate as an industry if there's such a thing as a simple conditional line. Really intense negotiations are going to be done via traditional methods, and it's hard for me to envision a scenario where that will not be the case, or even where anyone wants it to not be the case. So onto the signed line advice, where the final signed lines are given to the market. We also have an API equivalent to the post-placing message, where once the contract is deemed ready for accounting, the contract sections that have been derived from the placing layers are shared. So the simple example would be you have your 1 million excess 1 million placing layer, but perhaps it gets broken into different contract sections to support different currencies or different terms or whatever the case might be. Having this step in place really greatly reduces the number of queries we have on the first technical accounts that come across. The blue box on the bottom is not just a passing comment. It's very important. I probably should have put it in flashing red letters. All the information is still always available via the traditional methods throughout the process, same as today. For risk-adverse people, and I am one, this is key. The absolute worst case scenario is that businesses transacted exactly the same way as it was last year. Virtually no risk, high rewards. So now over to Ralph to discuss our implementation in more detail. Ralph?
Yes, thanks a lot, and now to the next slide. So thanks a lot, and thanks for all the intro and the information on where we are, where we come from, and actually where we go. What I want to talk about in the next couple minutes now actually really become very concrete and actually how this works. I mean, as you have heard, we have created the standard, the dictionary, agreed on the structure, and all the partners are now really in progress of making that live and implementing, and really also getting all the benefits we have promised with all that. So what does it actually mean is we agreed on a so-called notified pull model, but also basically the agreement on one model makes it the implementation scalable and repeatable for several partners with a less or low implementation effort. On the left-hand side, you see basically Aon, who pushes the notification, in this case to Swiss Re. We receive the notification, and we know this is a very small payload. And within the notification, we know the type. In this case, it's a quote request. And we know further down the contract ID. So we know what we have to do and what we need to get. So we do a technical validation of this small message, very fast, very easy to implement. And then based on the type, we know what to do. So in the quote request, we have to pull the contract. So we can decide on our side now, okay, next step, we actually pull the contract, which is in a fully ACORD standard-based form, which you see on the right-hand side. And this is basically how we do this process and how it's implemented. And we implement that with Aon, and we will implement it with Lockton, and we're talking to GC. So there's one implementation basically will fit several partners. Subsequently, this is also for the broker side. They will get a notification from us. For example, quote is ready with the ID, and can then decide, okay, I get the quote, I pull it, and I fill in my own system. How this happens on the Swiss Re side, and together with Aon, you will see on the next slide, where we see concretely how this is now reflected in our Swiss Re landscape. So you remember the previous slide, we pulled the contract, which you see on the left-hand side. It's a full-fledged contract structure. So it's not paper, it's not PDF, it's not email, it's really in a structured format. And we know exactly which field is what and where it belongs. And that made it for us reasonably easy to implement the induction into the Swiss Re system. So what we do in this case, we trigger our process. So we know, okay, message has been received. It's deal XYZ, and we start to get to work. Then we fill in our admin system. You see it on the top picture. I mean, for example, we know the contract name, we know the cedent, we know a lot of fields, and we don't have to guess, so we don't have to extract from emails or PDFs and key it in manually. We implement it once and automate it. And last but not least, we know what documents are coming, so we get the documents and induct those into our doc management system. So this is really concrete how this is done. And this is actually realizing some or many of the benefits you have heard in all the previous slides. That said, we don't have a view, but Aon is doing the same, just vice versa. So once we then have done our underwriting, filled in our internal system, did the wording check, did the costing, did the pricing, then we create an offer, and there's going to be this famous button we call the send. I click the send button. Aon gets a notification telling them, hey, the quote is ready. They pull their quote and also on their end can automatically ingest the data in their systems and again, profit from all the benefits we have shown. So this is very concrete where we are. And when we look at the next slide now, this is not only happening between two of the Rüschliken partners, this is actually happening across the world, across the industry. When you look at, I'm not going to read all of them, basically, all those couples are in progress and especially also close to actually releasing into production for the 1/1 renewals. So Aon Hanover, Aon Convex, Aon Swiss Re, Lockton, and such alike, we are all basically driving hard to really start harvesting the benefits of what we have done with definition of the standard and definition of the guidelines, and also now with the creation of the best practice guide. That said, speaking of benefits, to recap again on the next slide, what that brings to you, basically, we use a common language. In that sense, that's the standard. And now more and more with the implementation, also compatible processes. And we gain all the benefits. I'm not going to repeat all of them, from efficiency to effectiveness to cost reductions. And also importantly, really the onward process automation integration. So basically, we start now with the whole process at the beginning, at the submission. And as we have also heard during the session now, we are now starting really to move to a full end-to-end electronically place where nothing has to be rekeyed, where information is passed on, filled, enriched, then goes back and forth. But we have never a break in the media. We have never a break in the standard. We can go all the way down to claims and accounting with enabling also the e-placing process. That said, that brings me to the last slide to basically also recap a little bit what were the key success factors from those pilots. There's also some lessons we learned and some, let's say, falling down and getting up again. One of it is really start with a simple use case. I mean, it's really the easiest to really start a simple one, maybe new business, maybe one market, maybe only proportional, and constantly try to see the big picture. Basically, this is only the start, and then you can further enhance. What you need, if you do move forward, you need management presence. You need to have senior manager on the business, but also on the IT side to really help solving challenges, and really push that forward. And all of that, as you have seen, the standard definition has taken some time, a couple of years, but also be mindful of there is a bit time involved even to technically connect that. So this all needs a bit time, but the moment you have that done, the moment you have connected, the moment you have your first connection, compare it sometimes with drilling a hole in the mountains from both sides. Eventually you have the connection, eventually you meet in the middle, eventually you can pass a bottle along, and a couple of weeks/months, a year later, you have a fast train going the through tunnel to the whole tunnel. I think that's what we're working towards. But never forget also the change management. It needs a lot of change management, especially in-house, to also convince constantly your operations people, your underwriting people, your governance people, your risk management people. Also, as Troy mentioned, oh, now we're switching to electronically. What if something is wrong in the message? What the layer is suddenly wrong? What the price is suddenly wrong? That's why at this point in time, we still also rely heavily on the fully, what we call traditional approach. But I'm 100% sure this will slowly go away now as we're really enhancing piece by piece our implementation. We will go towards more and more back and forth messages. We will more and more exchange deals and deals information electronically. And eventually we will also then really move away from the traditional, slightly manual, slightly old-fashioned process towards the future. That said, I think I am the last speaker of the official part, and we will now switch to question and answers.
Apologies, typically on mute. That was really professional. I was just saying thank you so very much for everybody taking the time to give us those presentations, and we do have some questions lined up already in the Q&A, so I'm just going to start from the top and work my way through. Anybody who has a question, please feel free to enter it in, and we'll work through them. So I've got a question from Jitin, which is, what is the control around completeness and quality of data coming from the broker? As an insurance syndicate or carrier, how are you making sure it's correct and meets the underwriting and organizational downstream reporting standards?
Okay, I guess that's probably for me. I'll start with that one. The point I'd make with working with Marsh on the new approach, that when they've adopted the digital MRC schema, they've spent thousands of hours working with their brokers and their compliance teams to build much more effective MRC schemas, I believe, than you would have got under a document regime. So when we start that process with Marsh now, the MRC document template is available. And because each of those fields within the template now, you can validate, you can put terms and conditions against, you could do things that you could never do on the paper model. So my view is that the data quality is way better than the previous model in terms of all those steps that have taken. I think Jason might want to add a few comments about how Marsh have approached that and how they've seen that as an opportunity to work with that. Jason.
Yeah, thanks, Simon. Yeah, basically, the fact that all this data is digitally available at each stage of the trading process, and it's available in real time in a way that we can draw down via APIs. We can constantly monitor the completeness of those tags. So the completeness is one side. The data accuracy, and I think both sort of formulate a picture of what data quality is. So you've got data accuracy and data completeness. Data completeness is something we can monitor very well, and we are monitoring very well to date, right? And we're holding brokers to account as they complete those fields. But the quality, the accuracy part is always a hard one to sort of put in, because you can't define all the rules up front as to everything that they might enter incorrectly, if that makes sense. There's a lot of validation rules that will go into that. So, having multiple, sort of checks as we go throughout our process. So our renewals team will, visually look at those slips and make sure the data is input correctly. Then we've got internal broking sort of people in our internal broking teams that sort of look through it again. So it goes through a few second pair of eyes checks throughout the process, and then it gets validated downstream as well before we actually send it to Simon and AXA via an eBot message. And then Simon, you're doing the same on that side as well, validating it against your own record, sort of kind of core set of data, if you like. So there's a lot of points in the process where it gets sort of, looked at and monitored.
Yeah. And I think back to Troy's point, you also get, as well with the message that brings a structured data table across, you also get the original PDF version as well. So you don't lose that and just get a partially completed data table. You get everything and more in addition. So it's kind of how we move with that and how we're working together with Jason and the teams. And another example is they're designing the schemas that are appropriate for each of the line of business areas as well. So that provides, I think, new levels of ability that we've got to get this data right and move it in real time through the process. Thanks.
I don't think Clarissa was going to thank me for this, but I think it might be a good point to chime in and just talk a little bit around the ACORD governance that's in place, just to monitor the message quality, and also, I guess, the forums that are available when the market needs to leverage ACORD to say, actually, this field isn't working for us. Yeah. It's not bringing us the results that we expected.
So ACORD operates a number of working groups, which are made up of practitioners and technical people who look at the business process and the business data and agree what validations should be applied. Some of these are business validations and others are technical executable validations, which we then provide through executable files executable files which can be downloaded and put into your own estates. So from that perspective, there is a level of confidence that at least everybody who implements the standards meets a minimum level of validations. The validations will fail before it reaches the processing systems. So we do a lot of work in terms of agreeing what those common validations will be. As we move into placing, obviously, there are going to be specific validations per line of business, specific validations per stage in the placing process. You're going to have a much richer data set at the end of the placing process as opposed to the beginning. So we look at the stage that data would be provided and include that in the considerations for the validation rules. All those validation rules have been agreed by the relevant working group and are published on our website. So you can receive them as an executable file, or you can see it as a list of a very long list of validations that can be applied within your systems. So all of that is already there. In terms of the schema, we also provide a JSON schema for placing, as well as schemas for EBOT and ECOT in XML, which also enforces some of those validations that have been pre-agreed with our community. We have a very, very rigorous governance process for putting those validation rules in. So it's not a bespoke, oh, this company's decided that they're going to apply this validation or this schema. It is a universal schema and universal validations. Does that help?
Yeah, that's a very full answer. Thank you very much.
Kim, can I just add one more point? Yeah, the other important point I think is about the collaborative market trading platforms. So if I give an example of, we receive somewhere over 50,000 endorsements a year, and previously when they got transferred on PDF documents, quite often fields were missing. Whereas now when you look on the trading platforms, you can see the linkages between those documents and the original risk. So because of the platforms and the discipline now that people are starting to use them at the right part of the process rather than just putting documents back on them, you can now start to see the life cycle of a risk evolve. And that really helps data quality, ability to match things, getting rid of rework and all of those problems. So I think, again, this is just a good example of how this is kind of coming together as a much stronger process. Thanks.
Excellent. So it sounds as though there is a bit of a journey to learning to think digitally, I guess, but certainly got some good foundations of how to move towards that. I'm just going to address one question very quickly here, which is from Jack. Yes, we are showing the presentations. The slides will be available, as will the recording, and an email will be sent to you afterwards to advise how to access those. I've got a follow-up question from Jitin, which I think might be quite brief to answer, but you never know. He's asked, or he or she, apologies, has asked, does this change eliminate the issuance of document as in the MRC altogether? in terms of supporting docs, how does this support external or internal audits?
I can take that if you want, Kim. In a data first setup, which is what Simon and Jason are talking about, as well as Troy has discussed, the supporting document is still, an MRC is still required at the end of the process. That is your record of the contract. But if it's based off the same data as being that has been exchanged throughout the placing process, there should be no difference between the two. But there still continues to be a need for an MRC. During the placing process, there is also documents that are exchanged. So you're going to get your all sorts of documents are exchanged during the placing process to provide context for that placement. Not everything is digital. There are some things which would remain, images, for example, which would remain as supporting information to the placement.
Excellent. Thank you very much. Right, I'm just scrolling through these questions to see if I can aggregate any of them. I'm not going to try and squish these together. I think that could be a bad move on my part. So I have a question here which says, are there test data sets that show how the standard is implemented? And I think that does lend itself to what's been said previously. But going into sufficient detail to say things like where it says a company ID is required, what type of ID should that be? LEI if available, and DUNS if not, etc. What level of detail does that go down to?
Do you want me to take that?
Oh, go ahead, Clarissa.
Sure. As a generic position, we tend to use the DUNS codes because it is universally understood. There are some more, well, not legal entities, but there are instances where DUNS codes won't be appropriate or aren't available. In that case, it would be a declaration of the body who provides that code, as well as the code itself. For example, for interactions with Velinetic in the future, you may want to use your syndicate number, in which case the agency wouldn't be DUNS, it would be Lloyd's. Same for IUA codes. So it's just the requirement is that you have an ID and the agency who provides the code. Typically, we do prefer DUNS just because it is more universally understood.
Maybe just to add to that too, those tend to be repeating segments, right? There's nothing wrong with saying, this is company A, their FEIN is this, their NAIC is this, their LORS code is this, their Dun & Bradstreet is this, their S&P is that. Right. So generally, we err on the side of providing it in every mechanism we have to keep all the receivers of the message happy, depending on what codes you tend to use internally.
Thank you, Troy. I have two questions from anonymous attendee, and they've asked both, is there a list of what fields are used per line of business? And could we add the link to the validation rules to the presentation? And I think that's probably best addressed by Clarissa.
So let me deal with the easy one. There is a list of the validation rules. Those are available to ACORD members. They are available on our website and can be downloaded. The people that you've been speaking to have spent a lot of time developing those validation rules in conjunction with the relevant communities. They are available for download, both as Excel and within the XSDs themselves, which are the executable files. What was the second question, Kim? Lines of business.
Yes.
So that is more a case of we're working through the line of business one at a time. There are some available which are specific to lines of business. Not all of them are currently available.
Maybe to add on that for the standard, the 3D version of the whole contract is somewhat line of business independent. We choose that explicitly because we only cover the contract structure, not the underlying risk info. So we don't use what lines of business, what losses, what profiles, what risk information you have. For the facultative version of it, or the enhancement for facultative, We've chosen property as the first line to enhance the standard, because this is pretty large line, and this is, I mean, I put it in quotes, a fairly simple and a way forward. We decided to have a first progress on a line of business specific, like schedule values. What is a location? What's the description of the location? Address, a street, a SIP, a state, a country, a lat and long is kind of standardized on a global scale. So that made it a bit simpler. We have not yet decided, on the steer crew has not given the steer yet, which line of business we might follow up, be it casualty, be it engineering. The further down you go in the more concrete lines, especially special lines, the more complex the description on the underlying risks probably become, especially then to standardize. So that's yet work to do. But on the property side, I think it's available, and we start also then seeing some first implementations on that side.
Okay, I have 2 more questions, which I'm going to try and squeeze into the time available. I think you may get slightly briefer answers. We can definitely follow up if we don't get to answer them in full. So Asset from Great Lakes is asking, which lines of business within the broken houses are keen to move forwards with this? And he's noted that obviously he's had some pushback from various brokers using PPL, or at what stage they use PPL. And concludes by saying a list of lines of business that brokers are willing to transact digitally with a list of their key contacts would be great, so that carriers were able to approach them. And obviously, I agree. But does such a thing exist?
Jason, I think you want to take that.
Yeah, I can take a first stab at that. So from our point of view, the focus, as mentioned a couple times, has been on the treaty reinsurance and property facultative and property insurance. That's been kind of where we've been going so far. We've been working with the various placing platforms, the PPLs, the white spaces, etc., to integrate into their systems as well. But from at least speaking from a reinsurance side, we're very agnostic on that, right? If an individual market wants to use an individual placing platform and they can, follow the ACORD standards, we'll provide the data there.
So from the Marsh side, pretty much all of our lines of businesses are already trading on white space. So that's like digital transactions all the way through. So with who to get into contact with, I suppose on our side, we're already trading that way. So we're the ones sending you guys the slips digitally, right? So, as long as you do business with us, you'll get a digital slip. I think that's the answer. There's no order of rollout. We've actually been through that journey in the past 2 to 3 years, and we've actually even got the famous aviation guys on it who weren't actually on a placement platform before, and famed for having their complex ways of trading and verticalization on their risks. So yeah, I'd say because we've got the most complex ones on, we're pretty much covered.
Excellent. Thank you very much. We have approximately 30 seconds left, and so I think I'm probably going to skip this last question. Apologies, Jack. I will let you know what his sentiments were, and perhaps we can try and address that when we send the slides around, if anybody has any comments. But again, he's noting that there seems to be quite a bit of pushback from brokers and or carriers in the market who are kind of pointing their fingers at each other when they're trying to move forward with this kind of digitization work. So apologies that we don't have time to fully answer that in this session, but we will try and get some responses from our panelists and put those into a very special answer just for you, Jack, and put that out with the slides, if that's okay. And bang on time, which I will get told off if I go over. I would just like to take the opportunity to say thank you very much to all of our panelists for doing an excellent job today. Thank you to everybody that took time to come and see this presentation, and I hope you all learned something. Thank you very much.
Thanks, everyone.
Thank you.
Thank you, guys.
Bye.
Bye.